Howdy, y'all. Welcome to Liberty Call. Today is Thursday, January 11th, 2024. Hope everybody's having a fantastical day out there. It is snowing like crazy here at my house. It was only supposed to be like an inch or two today, and it has not stopped falling. So I guess the weather forecast guy at AccuWeather was a little off. So not that I mind. I mean, the people here in Colorado whine and moan if we don't get enough snow, and they're getting like feet up in the mountains. So, I mean, we're right here at the edge of the mountains, so we're kind of at like 7,000 feet. Whereas the Flatlanders down in Denver, down around, was it 5820 or somewhere around there? So anyways, all right. Hope you're having a good day. If it is your first time watching Liberty Call, if you could do me a favor, give me some thumbs up, likes, shares, subscribes, follows, press the notification bell, because occasionally I say something smart. I can't guarantee it today, but occasionally I do. So, all right. Well, let's go ahead and get into today's numbers and see how they turned out. And, let's go to the chart first, because it's a little more interesting. So this is the Dow Jones. We can see that things opened up. Let's see how far they were up. They were up about 0.25%. And then the CPI report came out and came down. It was in the red most of the day and looks like finished in the green. So same thing with the S&P 500, was up about 0.25%, fell down at its worst, was down about 0.87. Got back into the green for a bit and then fell back into the red. And a very similar chart for the NASDAQ, up about 0.61%. And at its low was down about 1.06. So most of these things went up, went down, and finished around the flat line. So, all right, let me get back to my, there we are. All right, let's go ahead and see how the world did today. The Dow Jones finished the day up 0.04%, 15 points, closed at 37,711. The S&P 500 was down 0.08%, closed at 47,79. NASDAQ flat at 14,970. The VIX fell 1.89% today. It's currently at 1246. Canada down 0.43, Brazil flat down 0.06, and Mexico up 0.22. In Europe, Germany was down 0.86, the UK down 0.98, France down 0.52, Netherlands down 0.06, Spain down 0.62, Italy down 0.66, Switzerland down 0.9, and Portugal down 0.19. Russian exchanges both green, MOEX up 0.52, the RTSI up 1.47. And the overnights, they were all green. The Nikkei was up 1.88%, Australia up 0.5%, New Zealand up 1/3. In China, the Shanghai was up 0.31, the Shenzhen Component up 1.47%, China A50 up 0.27, DJ Shanghai up 0.59%, Hang Seng up 1.26%, and the Taiwan weighted up 0.46. So those are the markets for today. But like I said, the CPI numbers came out and really put a kibosh on everyone, hoping that at the March meeting that they were going to go ahead and start lowering rates, which the March meeting is the 19th and 20th. They do have a meeting this month on the 30th and 31st, which I don't think they're going to do anything other than just evaluate, where things are at, kind of the year end, what does the end of, the cumulative 2023 numbers look like. But, there was a lot of hope that the Fed was going to lower interest rates. I mean, again, before anything, any sort of black swan event, I wouldn't doubt that they would raise or lower rates by, 0.25% or 25 basis points if you speak Fed talk. But I seriously don't think they're going to really do a whole lot until until something bad happens. And that's usually when so if they can be the hero, lower rates, the economy gets a little better, and then they say, hey, where's my reward? All right, let's get to the market recap. S&P 500 slips after rising briefly above record close on CPI data. Global stock indices experienced declines on Thursday, with the S&P 500 slipping after briefly surpassing its record closing high. The dollar reached a one-month high against the yen following data revealing that the U.S. consumer price inflation in December exceeded economists' expectations. The CPI showed a 0.3% rise for the month, resulting in an annual gain of 3.4%, exceeding the expected 0.2% and the 3.2% respectively. While some investors interpreted this data as raising doubts about an immediate rate cut by the Federal Reserve, others emphasized that it does not indicate resurgence in inflation. Yeah, everybody's going to talk about how they view things, but wrong. I have that the wrong way. So yeah, everybody's going to talk about, how this is how it fits my argument, and same thing with the other way. again, I wouldn't get too worked up over it. Let's see where things go. The Pan-European Stock 600 index declined by 0.5%, and the MSCI's global stock gauge shed 0.29%. The dollar index rose by 0.08% to 102.42, with the euro dipping 0.06 to 109.63. The dollar gained 0.3% against the yen, reaching 146.10, the highest since December 11th. The U.S. Treasury yields exhibited mixed and volatile trading after the U.S. inflation data. Crypto stocks like Coinbase were down, while Bitcoin rose 2.7% to 47,208. The approval of Bitcoin ETFs by the SEC is considered a significant development for the cryptocurrency, with expectations that it could reach 100,000 by the end of the year. Standard Chartered's head of digital assets research, Jeff Kendrick, estimated that if ETF-related inflows materialize and in 2025 level closer to 200,000 as possible. We covered an article yesterday about that. Investor attention is turning to U.S. earnings season, with banking giants J.P. Morgan Chase, Bank of America, Citigroup, and Wells Fargo set to report earnings tomorrow on Friday. So, again, it's kind of a mixed bag right now. We'll see where things are headed. Got an article here. This comes from First Trust. It is the December CPI, and this is Nate Guernsey is the analyst, and Brian Westbury is the chief economist. So let's see what they had to say here. And let me get my summary up. All right. In December, the CPI in the United States rose by 0.3%, slightly exceeding the anticipated 0.2%. Year on year, the CPI increased 3.4%, reflecting persistent inflationary pressures. Energy prices experienced a 0.4% uptick, and food prices rose by 0.2% during the month. The core CPI, excluding food and energy, matched expectations with a 0.3% increase in December and demonstrated a 3.9% rise compared to the previous year. Real average hourly earnings, adjusted for inflation, saw a 0.2% increase in December and a 0.8% rise over the past year. Additionally, real average weekly earnings declined by 0.5% in the same period. Despite a year-end acceleration, inflation remains a concern, challenging the notion that the previous inflation scare had subsided. The CPI figures surpassed expectations, with the 3.4% year-on-year increase indicating a 3-month high, while an improvement from the 6.5% recorded in December of 22, it still falls short of the Federal Reserve's 2% target. Core prices, a measuring excluding volatile food and energy components, rose 0.3% in December, reflecting a 3.9% year-on-year increase, almost double the Fed's target rate. Rental inflation, a significant component comprising a third of the overall index, persisted at a 0.5% monthly increase and maintained a 6% annualized rate. The supercore and index, excluding food, energy, and other goods and housing rents, rose 0.4% for the second consecutive month, showing a 3.9% increase in the last 12 months. I mean, how much more stuff that you use on a regular basis, food, energy, other goods, housing, rents, how much can you take out of the inflation data to make it look any better or worse? Let's see here. While inflation trended lower in 23, it remains a concern for the Federal Reserve. The current state of monetary policy, with interest rates above inflation and a 4.3% decline in M2 money supply from its peak in July of 22, may impact inflation dynamics and the potential for an economic recession. The Federal Reserve's response to economic weakness could be crucial in determining the trajectory of inflation in the coming months. In related employment news, initial jobless claims decreased by 1,000 to 202,000, with continuing claims dropping by 34,000 to 1.834 million, suggesting moderate job growth in January. All right, so that's kind of the scoop on everything right now. Let's go to some not so positive news. U.S. budget deficit soars by 50% in December as fiscal collapse under Biden accelerates. Well, I mean, Trump, he played a part in this. It's not like he's not guilty here. I mean, I'm certainly no Biden fan, but, or Trump fan by that matter, even though I voted for him. But yeah. Anyways, all right, let's get into this. In December, the United States continued its extravagant spending trend, reporting a budget deficit of $129.4 billion. This comes as no surprise given the ongoing fiscal excess, characterized by massive multi-trillion-dollar debt-fueled spending spree. The U.S. Treasury revealed that the country collected $429 billion in taxes during December, while total outlays surged to $559 billion, resulting in the substantial deficit. Traditionally, December deficits were relatively modest, but recent years have seen a departure from this trend. In 2020, the December deficit hit an all-time high of $140 billion. While it dropped in 2021, the figure rebounded significantly in 22 and approached the December crisis high last month. Tax receipts in December were $429.3 billion, down 5.6% from the same period last year in 22, and a substantial 11.8% drop from December of 21. On a trailing 12-month basis, total tax receipts were $4.521 trillion, reflecting a 7.2% year-over-year decline. Imagine this. The government in a year collects $4.5 trillion and still overspends by $2-3 trillion. I mean, we don't have a tax problem in this country. We have a spending problem. We've got way too many people who live on the government dole, who are paid through, direct payments as an employee or a welfare recipient, or, they're employed as a contractor, which is just another way of, bribing people for jobs. And it's just, in my mind, it's unacceptable. We can't continue to do this. All right, where were we? This marks the 9th consecutive year-over-year decline in trailing 12-month tax receipts, historically observed only during recessions. In contrast, outlays showed no sign of abating, reaching $559 billion in December, a 3.5% increase from the previous year, and a considerable rise from the 2021's $508 billion. The 6-month moving average suggests an exponential increase, even accounting for the spending surge in 2020 and 21. The year-to-date budget deficit for the first 3 months of fiscal 24 is already at $509 billion, potentially on track to become the largest deficit in U.S. history for a single quarter. This scenario is reminiscent of the outlier year of 21, when multiple trillions were injected as stimulus measures. The December budget deficit exceeded expectations, surpassing the $87.5 billion median estimate by over $40 billion, and it was over 50% higher than the December deficit in fiscal 22. The unsustainable trajectory of U.S. finances raises concerns about the impending financial collapse, as highlighted by the Congressional Budget Office projections. The accelerating path to ruin is evident less than a year after optimistic White House projections suggesting a challenging outlook for the U.S. budget deficit in the coming years. So, myself personally, I think, the collapse of the United States will go one of two ways. Either the people will just get so pissed off at what the government's doing that they'll just stop paying their taxes, or they'll grab weapons and and solve that problem that way. Or the other way is we're just going to have a financial collapse. The dollar's going to, be worthless worldwide. We won't be able to pay our bills, and the government will just cease to exist. So one of those two scenarios, I don't care which one. I just want to be free of the tyranny and the robbery every year that the government does to me. But, we shall see. Will it be this year? Will it be next year? I think it was yesterday. I was talking about the Bitcoin stuff, and I was like, well, it could be this week, next week, week after. Boom. Within a few hours, Bitcoin was already approved. That, text or tweet that went out the other day that they made such a fuss. Oh, that was we were hacked. That was probably sitting in their queue, ready to be somebody to hit send. They were in their drafts, and somebody got ahead of themselves and pressed the button when somebody said, "Yeah, it's approved. We're going to go ahead and do it." And some moron or intern probably pressed the button. So, all right. Well, that's everything I had for today. If you need anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a wonderful evening, and I shall talk to you next time. Let's hope it stops snowing. Adios.